Hello and welcome to the presentation of my master thesis. The topic today is about sustainability in the real estate market. And we now will learn about the relationship between property portfolio greenness and operational performance of real estate investment trust. Some background knowledge. The greenness here is used to refer to the level of green certification that the REITs hold. So, for example, if you have, if the portfolio of investment companies have many green certifications, then I use that as a process for the greenness. So let's jump to the topic. The motivation, three main motivations is the asset classes in the ESG sphere has been blooming in the past 2 years of 18 to 20. The ASG has its funds total asset has reached 17.1 trillion USD dollar in 2020 and account up to 33% of all the asset in a management. This number is documented by Pastor and Pedersen. And also, secondly, there is a clear guidance. There's no clear guidance on the metrics and the disclosure of sustainability that firms can use to quantify and disclose the performance in terms of sustainability. So there needs to be more work on that area. And why REITs? REITs is an investment company that is listed and holds real estate properties, which is one of the world's largest asset classes and is accountable for up to 40% of the global greenhouse gas emissions. So REITs bears very unique characteristic to investigate the environmental aspect of ESG. And we know that green certification has been here for a long time, but we still have greenwashing activities going on and our planet is suffering. So the question to ask is, does holding more green labels indicate better operational performance? This question is very important because if it doesn't make sense, are we really paying for what we want to get? So data and method is from SNL database access is provided by Aalto University. The original dataset consists of up to 55,000 properties owned by 343 REITs. And I adopt the Tuesday least square or regression method with instrumental variables and control variables. As you can see from the this is the first stage and this is the second stage regressions. I regress the greenness, which is the process for the level, the percentage of green certificate that a REITs investment portfolio hold. Locational greenness is the IV, the instrumental variables, and second, and a set of control variables. In order to the result of the first regression will yield the predicted greenness that is used in the second stage regressions, where I regress the operational performance on the predicted greenness. So the idea of the IV is that it has to correlate with the variables that is suffering from endogeneity, and it doesn't correlate with the residual terms. Endogeneity is a violations of the classical assumptions of OS regressions. Therefore, we needed Tuesday least square with IV to fix the issue. So as you can see from the data here, the description data after filtering for the missing value, the dataset includes about 4,000 observations, and the descriptive statistic on initial cost, property size, area, occupation rate, price per square feet, greenness per se, metropolitan statistical area MSA level of greenness, at the area of the statistical area, and the MSA greenness percentage, the locational greenness that I use as a proxy, which you will see a bit more in this table. So this is the two-stage regressions. I regress the occupancy rate on the first stage of the instrumental variables and the second stage on the predicted greenness. And in the first regression, there is statistical significance, but not anymore, where the t value is very low, only 2.09. And if we just merely use the OLS, you will see that the t statistic of the greenness is actually very high and statistically significant. So what we can say is that this table, the violations of endogeneity assumptions is observed in these regressions, and the coefficients of the greenness is up to 22.22, and this statistics is minus 24 here under the violations of endogeneity, which we don't want. So after control for fixing for endogeneity, there's no statistically significant anymore between occupancy rate and greenness of the portfolio, the greenness process. But investors do pay a lot more for the portfolio that have more green certifications. How do I say so? So in this table, I regress the initial cost of the properties on the greenness of the portfolio, and I do find statistically significance. T value is up to 12.58. More specifically, it can be seen that 1% increase in the greenness leads to 1.12% increase in initial cost that investor bear. The result is achieved through up to 4,000 properties observations, with 99% confidence level. So the findings is also consistent with previous research. For example, rents have been documented to have it to be 5% higher for LEED certified office properties and some 3% higher for Energy Star rated buildings. The reported increments for transaction price is about 19% higher and 11 and 19% higher respectively for LEEDs and Energy Star. Other authors have found similar findings as Forst and Mark Alistair 2019, Miller 2008, and Willie 2010. So what is the conclusion? The conclusion is that I did not find a statistically significant relationship between occupancy rate and the greenness of the properties after fixing for endogeneity. I think there is some noise I will need to check soon. Excuse me about that. And I do find that investors do pay more for a property with green certification, so they do not necessarily get more excellent properties by just buying properties who have more green certifications. It could be that those properties are related in the area where the owner have better relationship with the rating agencies, and therefore they just merely have more green certifications. but the operations nor issue is not necessarily better. And the contributions of the thesis is on two levels. Firstly, it is look at the whole property level where there is a gap in current literature. Current literature mainly look at the um, property specific um, at, but, investigation, but this thesis look at the whole property level of the whole portfolio of REITs. And secondly, it uses very updated data up to 2021 of the current holding of REITs in the North America and Canada. I would like to thank you for your attention, and I would like to invite you to have a look at the paper to find more relevant information which can help you to understand more technical details. Thank you and enjoy the rest of the day.